This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Pierre, thank you for joining us today.
Hey, thanks for the invitation. Thanks, Timo.
Yeah, I've really been looking forward to this conversation. You sit at such an interesting place in the Bitcoin space, connecting the original ethos of Bitcoin and infusing Bitcoin into the traditional monetary system. Now, Bitcoiners typically don't see the state or the fiat system as a solution to societal issues, to say the least. So it's not surprising that there's an aversion to getting governments or corporations, which are often viewed as extensions of the government, to adopt Bitcoin. Some Bitcoiners are potentially worried that Bitcoin may be co-opted and its role as freedom money kind of diminished. So in that context, you recently had a post that said banks holding too little Bitcoin as capital on their balance sheets is a threat to the stability of the global financial system. Banks need to be accumulating Bitcoin. So for listeners who might not be able to fully wrap their head around this, what do you think the role of Bitcoin will be in Bitcoin's monetization, and why do you think they need to be accumulating Bitcoin? Like, what's the risk if they don't?
Yeah, so great question. If we look at the history of like Bitcoin ideology, right, there's you go back to like the block size war. People were like, oh, Bitcoin's for payments, Bitcoin's a store of value. And basically, there was a view that the way to have money fix the world is really by getting rid of 3% Visa fees, right? That essentially. And it's funny because now that whole project has been taken over by the stable coins. But basically, the thought that there's a particular way for Bitcoin to succeed was there. And I have always had my particular way of thinking how Bitcoin succeeds, which is just as a monetary system that replaces the old one. And that would have lots of downstream positive effects on every part of society. Now, I'm also, a pretty staunch libertarian. Sometimes anarcho-capitalist, sometimes not. I vacillate between. I like minarchism as well. But basically, I have that view. Other Bitcoiners are anti-corporation, right? So they have that view, which I disagree with. I don't, and there's actually an interesting libertarian debate about corporations because, they're limited liability companies, they're franchised from the state. So aren't corporations an extension of the state? And the counter argument is that you could have a corporation in a libertarian society as well. And so, there's not, but, I actually think that it goes really further to a point of individualism, right? And Bitcoin's all about self-sovereignty and the sovereign individual. And so anything greater than an individual is, not good. And I just reject that view. I reject it, first of all, because I value family a lot. And, when you look at the institution of family, you could say, oh, look, like this is anti-freedom, right? Now you got to take care of your kids. You're monogamous with your wife, but I just don't see it that way, right? And it's a voluntary thing that people enter into because it's really family to me is like one of the most important things, and so valuable to being a human at all that making individualistic arguments against it seems to me like kind of going too far in the kind of libertarian mindset. And, I feel that way about religion as well, about corporations. So in any case, when we talk about Bitcoin adoption, all of these institutions are going to adopt Bitcoin, and they're not individuals, right? They are, groups of individuals. That's where I don't really see a contradiction between saying Bitcoin empowers the individual and saying Bitcoin also empowers, churches, families, corporations. Now, it's interesting on the question of the state, right? Because on one hand, you could say, well, Bitcoin empowers the state, right? Because now the state doesn't have to rely on trusted third parties to transact and to hold its value, which historically, by the way, has been a problem, right? That states have always had this issue of where do they keep their money. It kind of led to a very entangled relationship with the banking system, to say the least. So I actually think it's an upgrade to say, hey, now the state can actually have not only money that it can hold itself, right? So maybe the legislators should have a multi-sig or something, but also that they're holding money that they didn't create, right? So they are abdicating their monetary monopoly by adopting Bitcoin. And so for a libertarian to say that that's bad, I don't know. I think that's good. I think that and Larry Fink, head of BlackRock, the epitome of the suit, was on national television saying Bitcoin's above government, right? So, what freaks Bitcoiners out is that it seems like we won way too quickly, right? Why didn't the state fight us particularly hard? All we get is Elizabeth Warren screeching at us. That's the extent of the state fighting against Bitcoin. And so that's unsettling suddenly actually the president loves Bitcoin and, they're talking about how to acquire more Bitcoin. For Bitcoiners, it just, I think that it's, they need to get used to winning. It's very, it seems unusual to them.
Yeah, no doubt. Yeah, you made me think of a lot of things there. And this is actually a theme that's come up on previous podcasts as well. It's this feeling of, wait, this is kind of moving a little faster than we realize. But I'm curious just to bring it back to banks, because I feel like your ability to play out the game theory and how things work out. I want to understand. Okay, so we're telling the banks in your post that they should be accumulating Bitcoin. If they follow your advice, that'd probably be better for them. First of all, is this going to lead to the fractional reserve system ending up getting disrupted? Can fractional reserve exist on a Bitcoin standard? I know this is something even when we were on the gold standard would exist with the free banking era and, individual banks issuing their own notes backed by gold. And if we do fall into fractional reserve, does that put us in the same trap as gold and not actually have the paradigm shift of Bitcoin as we think of it?
Yeah, great question. So on the point about fractional reserve, I think, look, if we let's model out classically what happens under a fractional reserve system. There's more claims on the assets than there are assets, and at some point, and this is actually this is in the category of uncertainty, not risk. At some point, there's a run on the bank, and so this has been modeled, by academic economists beyond just Austrian economists, right? They talk about the problem of bank runs. And the solution they came up with was to just have insurance that is subsidized by the state. And, what backs up that insurance? Their ability to print money, right? So basically, fractional reserve banking system only works if there is an authority that can print enough money to make it full reserve. Which is quite ironic, right? And so what if that doesn't exist? What if there's no authority to make it full reserve? It collapses. And so then so it's an unstable equilibrium, basically. And we've seen it in Bitcoin, actually. So I would argue like Mt. Gox, for example, right? Basically fractional reserve, FTX, BlockFi. But we have to also think about, so let's look at MicroStrategy, for example. Strategy. I would argue that they are a full reserve bank. And in fact, they're kind of, if you look at their preferreds, like Stretch or Strike or Stripe, these are over collateralized. And so they're it's like a 600% reserve bank. And then the common stock, it signs up for, taking the loss or taking the win, depending on what Bitcoin does. and that essentially, to me that is disrupting the banking system, because now people are going to want to lend their dollars to Bitcoin treasury companies like Strategy instead of lending their dollars to banks, because they can earn a higher yield. So in response to that, what would be the correct strategic move for banks? It would be to accumulate Bitcoin. Right. I mean, it's like they're not going to get Strategy to be illegal, right? I don't think they're going to be able to pass a law against that. So I think that they have to adopt Bitcoin, and it's interesting. Today we saw an announcement that JP Morgan is going to be lending against Bitcoin, right? So I think that it's inevitable. It's like, Blockbuster's getting replaced by Netflix. It's not something that, or Kodak and, digital images.
Yeah, super fascinating with you bringing up that Sailor and what they're doing, and all these Bitcoin treasury companies that are fully over collateralized when it comes to the Bitcoin that they have. And you see that as disrupting the banking system, or that it will. If these banks don't wise up, is the collapse of them, is the collapse of the traditional banking system an issue for people? Or are you just saying that provocatively that, you're going to get disrupted if you don't?
Yeah, no, I think it's a serious problem for society if banks collapse. So while I'm opposed to fractional reserve banking, I'm not opposed to financial intermediation, right? And so there are people with savings, right, who want to invest that, and they could invest it directly by starting their own business. But quite often it makes sense to invest it indirectly, right, by lending it to, or investing it, or buying equity in somebody else's business. And so, like, financial intermediation, I think has to continue to exist for a large capitalist economy with division of labor, right? There's no doubt about that. And that, well, the problem with banks collapsing is that banks are really networks of relationships, right? So the ideal bank is the one where the banker knows everybody in the community, like has a trustful relationship where, he knows who's good credit and for how much, because ultimately somebody getting too much credit is actually bad for them, right? It's bad for the borrower, and somebody not getting enough credit is obviously bad for them as well. And so now I think that one point of contention with Bitcoin is that it's going to move a lot from a debt-based economy to a savings-based economy. And so you could argue that those relationships are not as important if everybody has, enough savings to accomplish what they want, and and then, you collapse the need for financial intermediation. I think that might be plausible. It's kind of a theory though, because even under gold, right, you still had lots of financial intermediation happening under gold. And it's so the other problem with banks collapsing is on the investor side. So, you have people who, through no fault of their own, they are investing in the fiat financial system, and they're not holding enough Bitcoin. And so, they might hold bank stocks, or they are a pensioner and the pension fund holds, shares in financial institutions. They've been advised by their trusted friend to have 40% of their portfolio in bonds, or even if they're old, 100% of their portfolio in bonds, right? If they're just living off of income. And you have the dollar collapse, you have the banks collapse, and these people who did nothing wrong. In fact, they did everything they were supposed to do, right? They worked hard their whole life. They saved up money, and now they have enough money for retirement, get rugged. And what does that do to the fabric of society? Nothing good. And I think that having a way to kind of bridge that so that they get onto the Bitcoin standard kind of seamlessly and not in a jarring, chaotic way, I think that would be good. And I say that, earnestly. So, of course, like we could say, hey, look, this 70-year-old pensioner, he should learn how to use a hardware wallet, and he should go on river.com or on unchained.com, sorry, and buy the Bitcoin. But I think that assumes two things. It assumes, one, the technological savvy, right, of just like knowing how to use computers and being comfortable with it, having confidence in it, trusting yourself to do it. Yeah, it would be great if God blessed everyone with that gift, right? Empirically, I know that he has not. So I know lots of people who don't trust themselves to self-custody. That's actually why I think services like Unchained are very valuable in providing collaborative custody and getting people more comfortable with that. The other point, though, is about risk preferences, right? So if you're in retirement and you need income, you can't go through a 4-year, cycle, right? So that means that you're going to have to hold something other than Bitcoin, and especially, when you think about, you could probably model it out where, hey, no, this person would be fine, holding Bitcoin in retirement, and they just have to have this drawdown rate or whatever it is. But the psychological toll of, checking your statement and seeing that it's down 80% and you need money
Easier
for,
said than done.
Yeah. It's very, it's very important for us as young tech savvy people to have some degree of empathy for, if not our parents, our grandparents and everybody else in society that doesn't happen to have the same kind of setup that we have.
Yeah, no doubt. And just to kind of like wrap up with the traditional financial system, which often seems at odds with how Bitcoiners think of it, and the theme of Bitcoin of being money for enemies, it in this context it becomes interesting because if you are if your enemy is adopting Bitcoin, that should actually be good for everybody. And so
yeah.
That's where this is like, does that track?
I want to dig into why they're the enemy. I think that they're the enemy when they don't give you a choice to opt out, right? Where I think that that's what Bitcoin gives you, and so they stop being your enemy at that point. And then they have to, now banks actually have to compete, right? And they've got to up their game rather than relying on a monopolistic franchise, and just delivering, terrible service and lots of fees and et cetera. So, in a Bitcoin world, the way that, the hyper competitiveness between banks, I think will, make people stop thinking of them as the enemy so much. Especially when you think about on the freedom side, I feel like for Bitcoin, we used to talk a lot about how Bitcoin's open 24/7 and you can send Bitcoin, very quickly. But then you start going into Cash App or these other fintech apps where, you can send dollars pretty quickly as well, 24/7. So, it's not really as impressive as it used to be. But arguably the reason we got to that was because they saw Bitcoin and they're like, oh, well, we need to compete more on this angle. The angle they can't compete on really is at the Federal Reserve level, right? So the Federal Reserve just, what we could argue would be that they have to run a tighter monetary policy than they otherwise would, due to that competition. How much tighter can they actually do so, right? I don't think they could tie their hands and say, oh, we're only going to have $21 trillion, right? And that's the hard cap on dollars. I think they've got too much political pressure to do that. But what they can do is buy Bitcoin in the strategic reserve. I think that actually does help the value of the dollar and of any currency, right? It just says adding Bitcoin to a corporation's balance sheet helps the value of the shareholders. In the same way, you know, I hope that we can get to a point where we can actually have the government backing dollars 1-for-1 with Bitcoin, and kind of run the gold playbook in reverse, speed run it. But we'll see. I think that, you know, we got to be engaged in public policy to move that forward.
Yeah, I remember there being a lot more momentum with the Bitcoin reserve early in the year. There's a lot of excitement around that. What do you think the likelihood of that is happening at this point? I know there were certain bills that they wanted to get passed first before they even get to that. Government shutdowns, like where are you seeing that momentum right now?
Well, so President Trump did sign an executive order that did kind of formalize their Bitcoin holdings into a reserve. So from there, you know, they also have accumulated. I was just reading about this. It's a crazy story about, I think they got 100,000, more than 100,000 Bitcoin, from a foreign criminal. And so I was kind of, what I was trying to figure out was, like, what their jurisdiction is here, and are they going to give the money back to the victims? Because the victims, I think, are in China. That's always
the question, right? Like,
yeah.
Who gets to keep this?
So there's that. Now, are they going to go and buy more Bitcoin? I don't know. You know, I think it's really challenging because the federal government has a massive deficit. And so they're always looking for ways, you know, just like the government shutdown right now, they're trying to find ways to spend less money. I would argue that buying Bitcoin is not spending per se, right? It's saving, right? And so it would actually be accretive to go and print dollars to buy more Bitcoin. But there's not enough people that agree with me on that, and so we have to you know, keep lobbying and keep educating. In Texas, Texas does have, generally speaking, surpluses, and so they created the strategic Bitcoin reserve for the state of Texas, and they allocated $10 million to that reserve, and so that, I think, maybe we'll see more momentum at the state level than at the federal level. But I also think that in a crisis, things accelerate very quickly. So were there to be a crisis of some sort, it could essentially make it such that the U.S. government very quickly, you know, buys lots of Bitcoin and does so, you know, in a panic rather than methodically thought through. And yeah.
And I'm sure the price of Bitcoin will just be nice and steady at that point when.
Of course, yes, yeah.
So if the state goes into that direction, and if they go, you know, along the lines of, you know, really buying Bitcoin, not just, what do they call it, seizing it from criminals, do you think that the state will or has a path to co-opt Bitcoin? As a
so this is a great question. And, you know, it applies to like BlackRock as well, and the ETF, and it gets. So I think that my first instinct is absolutely not, because essentially when you look at why can Bitcoin not be co-opted, I think it really comes down to the fact that it's permissionless and open source, and so you know, people can opt out of the co-opting, and so then it's not really, you know, co-opting anymore. And so there's that. But you know, the second part of that is, if you look at the prospectus and kind of the sales material for IBIT, for the BlackRock ETF, when they explain what the value proposition is of Bitcoin, they actually say that it's because BlackRock doesn't control it that it's valuable, right? They lay out Bitcoin's decentralized, and so that's why it has value. It has this scarcity. It has this global permissionless, you know, final settlement system. And so if they were to undermine that, then they're undermining, by the way, a product that they make a lot of money off of, right? The IBIT ETF has grown so quickly that, you know, their fee revenue on that is actually material. It's significant, and so they wouldn't want to do anything that undermines that or compromises it. So yeah, I don't think that that's and then furthermore, at the state level, the more Bitcoin states hold, um, one, they're in conflict with each other, right? So uh, can Iran co-opt Bitcoin at the same time as the U.S.? Not really, right? So um, if they're both fighting to co-opt it, it stays decentralized, it stays neutral, right? And so that's good. Um, and then also, same argument that if they hold lots of Bitcoin, why would they want to undervalue or undermine the value of the Bitcoin?
Yeah, exactly. And speaking of states that would be getting into the Bitcoin game, it sounds like at the state or municipal level, something like Bitbonds would be able to have a opening faster than the federal level. First of all, would you be able to explain to me, like I'm five, what a Bitbond is or Bitcoin bond is, and talk about your work with the Bitcoin Bond Company?
Yeah. So those are actually two separate things, and
There you go.
common financial terminology. The Bitbonds proposal is really about at the sovereign level to whether it's a local, state, or federal government to issue government-backed bonds that also, so 95% of the proceeds go towards whatever the government needs, right? Deficit financing, refinancing the old debt, whatever it is. 5% of the revenue or the proceeds from the bond issuing goes into Bitcoin. And so that then allows the government to protect the investor from the downside of Bitcoin because the principal is, guaranteed, while still having the upside of, a much smaller upside for Bitcoin than just holding its spot, but nevertheless having kind of like an upside kicker there for the bond investor. And so presumably that would lower the interest cost for the bonds because now the interest gets paid in the form of kind of the option value of the Bitcoin. And that would help, them sell more bonds. I don't know. I don't know how quickly it's going to take. Again, I think a crisis could rapidly accelerate it, right? Where they really need to sell bonds. But what I also think could accelerate it would be to pioneer it in the private sector, and so that's why I founded the Bitcoin Bond Company. Now, instead of backing it, 5% with Bitcoin, what we want to do is back it 100% with Bitcoin. So essentially offer notes. Investors would, institutional investors who run credit funds who can't buy Bitcoin directly, right? So they don't have a mandate for commodities. They don't have a mandate for equities even. And they need a note wrapper around Bitcoin. And so the way to do that is the same technology as mortgage-backed securities, which is actually where I started my career at Deloitte, auditing new issuances of all sorts of asset-backed securities. The principle of it is that at the end of, let's say, 5 years, the Bitcoin gets sold, and then the proceeds go through a cash flow waterfall of note holders. And so the note holders, not only do they have a credit wrapper around Bitcoin, but then they also have risk transfer within that, where there's a senior tranche that is the most protected. Now, there's still risk, right? Like if Bitcoin goes to zero, the senior tranche gets wiped out anyway. But that if Bitcoin just goes sideways or down 20%, let's say over the next 5 years, the senior tranche would still get full, their full investment back. And then on the other side, you have an equity-like junior tranche, which is first loss, and they get wiped out if Bitcoin goes down, but they're also leveraged long Bitcoin. So because essentially the way to do this is to redistribute the equity residual to the note holders. And so you have a profit share at the end of the cash flow waterfall. After all principal and interest are paid, the profits then go pro rata to the note holders. And so the junior note holders get an outsized return relative to the senior note holders because they took on more risk. And so this is a way of getting Bitcoin inside of portfolios that don't have any other way to do that. and also it's really a way of, when you talk with, for example, an investment committee, you might have two of the members are hardcore Bitcoiners. They've been trading Bitcoin. They love it. And then like three people who they just they don't get it. They don't care. It's they don't necessarily think it's a scam, but their view might just go so far as to say it's here to stay. But they're not doing moon math, right? They're not like running a node or anything. And so you need to have a way to negotiate the Bitcoin position with them. And the way to do that is to say, okay, well, you think Bitcoin's too volatile. What about something less volatile that has capped upside, but will have diversified Bitcoin exposure? Because the rest of our portfolio is collateralized by, empty office buildings or private equity deals that went sideways. So maybe have in there some diversification of collateral, and that way you just get a better outcome on the portfolio. And furthermore, there's also kind of the quarterly reporting issue, which is that you and I, we can look at our quarterly, Bitcoin statement on our wallet and say, okay, volatility is what it is. I'm down 80% over the past, but if you're doing this inside of a financial institution, there's some level of accountability for poor performance. And so, you might not necessarily be able to hold through the volatility. Mm-hmm. So your risk manager or the investment committee might say, hey, look, cut the position. You're down 20%. Like, they're not necessarily, more rational than individuals are. And they have to manage their risk, right? If you have the Bitcoin actually be inside of a debt or, a note product, then the mark to market is very different, right? Because now you're not marking the Bitcoin to market, rather you're marking the security to market. And there might not be a market. So, you might have to do mark to model, or mark to maturity or some other accounting method, that now not only are you kind of avoiding the problem of Bitcoin's volatility, but you're also able to hold the position longer than you otherwise would. And so I think that it's really incumbent upon us to try to push a long-term view of Bitcoin. It's probably not a good idea to promise people that, Bitcoin's going to go to $1 million this year, in December or whatever. It's and so, I think that developing products that are long-term aligned, and then also make sure that, the economics actually work and accrue to the right people. That's the mission for the Bitcoin Bond Company.
Gotcha. And so just to make sure I'm differentiating in my mind from what would you say the difference is between, or the standout difference between what you're doing with the Bitcoin Bond Company and something like a convertible bond or something like that with a MicroStrategy?
Yeah, so the main difference is that we're selling the Bitcoin and we're repaying the principal from the cash proceeds, right? And so equity by design is perpetual. Common stock is, the going concern, right? Is it's going to live forever. And the world of fixed income generally does not follow that pattern. Usually they want their principal back at some point. Saylor's approach, which I actually think is really going to work out very well, and has been working very well on the perpetual preferreds, is to say, hey, this is a fixed income product, but it's also perpetual. And so it's a complete mindset shift for investors. But fixed income investors, even though you can call a perpetual preferred fixed income, it's still a preferred equity that pays a dividend, right? So it will fall within the mandate of an equity portfolio manager, but his peer, next door over, can't touch it because it's not a self-liquidating note. It's not, it's not due at maturity, the principal. And so just makes it inaccessible. And so, to me, it's kind of a greenfield opportunity to create something that doesn't exist today, and that would enable everyone, across departments in financial institutions to be able to have a constructive view on Bitcoin and to benefit ultimately for the investors in the funds, right? Now, the portfolio managers, they would also benefit in the sense that they're outperforming their peers, which is something that they do care a lot about, outperforming benchmarks. And so it's a way, essentially for them to create alpha, is to have a structured Bitcoin exposure.
Yeah, and like you mentioned, there's pools of capital that have a mandate, whether it, like you said, for fixed income, for example. Is that the niche that Bitcoin treasury companies really can find success in, or is it bigger than that? And how many can be successful if that's it?
If we look at like Stretch, for example, STRC, I think that it's a great substitute for like a money market fund for a retail investor. I think that's kind of the lowest hanging fruit, in the sense that like Bitcoin was a retail driven phenomenon until very recently, right? And I think it still is primarily retail driven. I don't think that the institutions have co-opted it. I would argue that MicroStrategy, strategy, Bitcoin treasury companies have also been largely retail-driven phenomena, and that when it comes to what the treasury companies are going to be able to do with perpetual preferreds, I think that that's also going to be retail-driven, and so. It's kind of just a completely different demographic, because there's only one large institution that I know that the Wall Street Journal actually ran an article about, Capital Group, that is investing in size in Bitcoin treasury companies, and so I think it'll take them a while to like get comfortable with it. But when they do, obviously, everybody will benefit from that because more Bitcoin is going to get bought.
For sure, for sure. And it seems like right now the market is not necessarily appreciating the Bitcoin treasury companies. Like, what are they misjudging about the perceived risks or risks of these companies?
Yeah, great question. So I think there's really four factors. The first one is that the treasury companies are underlevered. And that might just be a timing issue of like they haven't had time to lever up yet. It's in Strategy's case, I think that it's a demand issue on the perpetual preferreds, and so there does need to be more education to find those investors who currently are earning 3%, 4% on their money market fund, and getting them ported over to digital credit. It's going to take a while, right? And so there's the underleverage problem. There's also a problem of essentially supply and demand, right? That there's lots of supply of Bitcoin treasury companies, but when Bitcoin is going sideways, there's not a whole lot of demand for leveraged Bitcoin exposure. It's, if Bitcoin ends up going where we think it's going to go and appreciating in value, then I think that demand will come back. I don't think that, like, if I look at the history of leverage in Bitcoin, leverage has been always pro-cyclical, right? And so there's zero doubt in my mind that it'll come back. But it's a prediction. Maybe I'm completely wrong and human nature has changed. The third is, I think that a lot of technology traders are in the AI HPC trade. And so that pushes down valuations for any kind of Bitcoin equities, right? The other part of it is on, we've got the tech traders, but then you've got the sound money traders, and they're all in gold, right? Gold has had a phenomenal performance this year. And so, I have zero doubt that they'll rotate back into Bitcoin and we'll see Bitcoin make new all-time highs. But I think that structurally that makes it so that the multiples on Bitcoin treasury companies are lower than they were 6 months ago.
For sure, for sure. That's great context. And you feel like what these treasury companies are doing, and I feel like you mentioned this 10 plus years ago with your speculative attack article, are leading to hyper-Bitcoinization. And I know that you have said that speculative attack would be followed by hyper-Bitcoinization. What is the timeline you anticipate that happening?
Yeah, so my flippant response is that hyper-Bitcoinization is already happening and has been for the past 16 years. But more seriously, it's an interesting question because normally, so if we look at like what the response to speculative attack is, right, of people shorting the weak currency, going long the strong currency, and then with leverage, well, there's three kinds of responses that the defender can do of the fiat currency, and the first is raise interest rates. They want to lower interest rates, so I guess that's not on the menu at this point. The second is essentially kind of capital controls. I would argue that's what Operation Choke Point 2.0 was, of just preventing dollars from getting into Bitcoin. They could come out and say, hey, look, like public companies cannot hold Bitcoin, right? That's a regulation, a statute. They could pass a law. I don't think that there's support for that in Congress, or certainly not in the executive branch. Quite the opposite. And so, but who knows who will be president in 5 years or whatever it is. And so, I think that there will always be that kind of regulatory risk, but I don't think capital controls are on the table for the foreseeable future. The third is to have a Forex reserve. And so then you're able to use the Forex reserve to kind of stabilize the currency. So we could actually see the government try to like sell their Bitcoin from the reserve to try to save the dollar or something. I think they should go in the opposite direction, though. I think they should use the reserve to fully back the dollar. And that would stop the speculative attack, because then the cost of borrowing dollars would be the same as the cost of the increased purchasing power in Bitcoin, right? The CAGR. And so that would kind of be mission accomplished anyway, right? At that point, we've reached 100% adoption. Well, on my terms, I know that other people would say, hey, look, we're still using dollars. So like, what happened? Where's the adoption? Well, look, if the dollar gets fully ported over to Bitcoin and like $1 equals 1 Satoshi, we're just talking semantics here. And I call it layer 21 scaling, which is, using trusted financial intermediaries and trusting the government to maintain that peg, right? Will history repeat itself? And then, they'll, of course, inevitably, change the exchange ratio and devalue the dollar versus Bitcoin or not. I think that just depends on, what we put up with as citizens, right? We live in a democracy. Like, it's astonishing to me why did people accept going off the gold standard? I feel like they really should not have accepted that. There's not really any other way to have it. Yeah.
I was just saying, if they knew the alternative, maybe they would have fought a little bit more.
Yeah, exactly. So I don't know what will ultimately happen, or on what time frame. I used to think that Bitcoin was going to replace the dollar like next year. And now I'm like, as I get older, I'm like, oh, well, it might happen in 50 years. I don't know. Maybe we'll still be around. But then there's kind of the suddenly argument, right? Parker Lewis's book, Gradually Then Suddenly. So, maybe it will be next year. I don't know. Yeah.
Yeah. The adoption of Bitcoin is so interesting, and the almost asymmetry of it, because you have examples like El Salvador adopting Bitcoin, and you think, okay, now it's going to linearly progress to like other South American or smaller nations, and eventually it'll make it up to the US, but it's within 4 years now, the US is appearing to lead the charge. And so what is this like asymmetry? I mean, because the other side of the asymmetry is you have the seemingly flat or even down of Bitcoin hasn't hit an all-time high versus gold since 2021. And so what does this asymmetry reveal about the actual pace or nature of hyper-Bitcoinization?
Yeah, that's a great question. Well, I think that Bitcoin ownership is kind of a relay race, right? So you have the OGs handing the baton off to kind of the next generation of adopters. And $100,000 is a big psychological number, right, for folks. And so I think that's kind of causing a pause here. But the new adoption is real, right? And eventually we'll run out of those kind of OG sellers that and then Bitcoin will go on another tear, I believe. But I don't think that it's something to be unexpected. And it's funny too, because it's like, this is proof that Bitcoin is not a Ponzi scheme, because in a Ponzi scheme, the OGs, like, they stay at the top, right? When you sell your Bitcoin, you know, you're foregoing all the future benefits. And so maybe those OGs will regret selling. But I'm sure that they're also, you know, doing good things with it, giving to charity. And so that's a positive.
Yeah, typically, like when I think of you know, a Bitcoiner who is kind of an accelerationist and trying to push forward hyper Bitcoinization, it would be of the mentality of like, hurry up, let's get to the bad part, like institutional collapse, so we can get it over with. And would you see that like these companies that are like speculatively attacking the dollar, both as accelerating hyper Bitcoinization while at the same time like giving us the best chance for a soft landing, and Bitcoin co-opting the state or corporations, etc.?
Yeah, absolutely. I mean, I think that it's kind of it's like a self-fulfilling prophecy, right? And so the reflexivity is definitely there. I don't know how much they can accelerate it, right? Because I almost get the sense that like when Saylor's buying Bitcoin, he's actually, you know, let's say he's causing the Bitcoin price to go up. He's stopping somebody else from buying Bitcoin, who, you know, like now they're like, oh, Bitcoin's too expensive, so I'm not going to buy it. Right? And I'm not like saying that to say like Saylor's doing something wrong. I just think that there's a rate limiting mechanism within Bitcoin where basically Bitcoin can only go up like a certain percentage before people lose their minds. And so like we've seen, it's interesting that why do alt seasons happen, right? Why do altcoin seasons happen? I think because Bitcoin went up too quickly, right? And so it attracts all of these like get rich quick people and all that. So I think there's like a self-limiting dynamic there as well, that on top of just the rebalancing of people selling, that people also sell to go chase the next shiny thing. And that's why we can't really accelerate Bitcoin adoption. It's just all you're doing is like you're accelerating altcoin adoption. You're doing that as people like as you attract the wrong kind of people, right? Who have high time preference.
Yeah, and they're probably not holding their own keys type of people as well.
Yeah.
Yeah, and so kind of in light of everything we've talked about, you know, from the treasury companies, speculative tax, banks accumulating, etc., how would you see the role of like sovereign key control evolving? Like, for example, like the ATF, extremely convenient vehicle to get long-term exposure like towards the asset. But, you know, this convenience comes at the cost of counterparty risk. And like, how do you see retail and retirement accounts and all these new Bitcoin holders coming in through the ETF, like graduating to understand the value proposition of holding their own keys? And
yeah, that's a great question. So I think that from a product perspective, the ETFs are moving in a particular direction, which is to have in-kind create redeem. And so meaning that you could actually convert your ETF shares to like your own private keys and send the Bitcoin out, and vice versa. and that once you get to that, then you could actually do collaborative custody create, right? Where you deposit your Bitcoin on a multi-sig with Unchained, then you are able to create ETF shares, and then you can go use those in the financial system to usually, like, people like to do like option strategies around that to generate income, or borrowing dollars against it, on much better terms than you can otherwise get. So I think that there's utility in the ETF wrapper, and so there'll be demand for it. And then in terms of kind of minimizing the risk, I think that getting to a point where there's collaborative custody for in kind would be good. I don't necessarily have kind of the view that Coinbase is going to get hacked next week, and so all the Bitcoin are going to be gone, and then anybody holding the ETF, it's going to go to zero, and that's kind of going to be the outcome. It's kind of strange because, like, obviously we like self custody, but you kind of have to FUD third party custody to like motivate people to get their keys off exchanges. And it's kind of, we have to be careful that doesn't become pathological of like essentially just crying wolf or something like that. Like, as much as I don't like Coinbase, the reality is that they're still holding their private keys. I think that the bigger challenge for, or the way people lose their Bitcoin with Coinbase is very different than like Coinbase's private keys getting compromised. It has more to do with like getting locked out of their account, basically, or getting a KYC AML thing that a lock on their account, or getting their account drained because they don't have 2FA on. So, it's almost like, for those folks, like, my advice is turn on 2FA. Like, that is the easy, like, you don't have to, go buy a hardware wallet yet. Like, there's kind of like the practical security aspect of, helping people not lose their Bitcoin or their IOUs, their Bitcoin IOUs. And that, perhaps having it in an ETF is actually more secure than having it at Bitcoin. At Coinbase, right? Through the retail interface, and so you get the SIPC insurance or whatever it is to protect your account there. But I think that one of the biggest challenges has been the essentially the cost of leveraging up when you don't essentially put your Bitcoin into an ETF wrapper, right? That borrowing against your Bitcoin Unchained is great, but like, let's look at the interest rates and the terms, and quite often it's challenging to make the math work for folks where it's like, well, I want to be able to know that I'm not going to get liquidated in a big bear market, right? And so I think Unchained's product and other products like it, they fill a particular need, which is more about like a short-term gap and, having the cash to cover that, and then being able to repay the loan pretty quickly, and being over collateralized. Like, yeah, that's so, but eventually we'll want to have a 30-year mortgage on your Bitcoin, right? And so that way you don't have to sell your Bitcoin, and you don't have to worry about getting liquidated, etc. So until, or at least get to the point where the interest rates are as low as it is on like margin lending for an ETF, right? And so, and the LTV is as high as that. Until then, I think that there's always going to be demand for that. Now, there's also, I would advise people to hold Bitcoin in cold storage and just don't lever up. Go get a job instead, so you're not borrowing against your Bitcoin. That's kind of the real advice there.
Yeah, no doubt. I feel like that's sometimes lost, like first principle of make more than you spend,
right,
and be able to actually save, and Bitcoin allows you to be able to actually turn that into real savings, not savings that's going to get devalued over time.
Yeah.
But do you think that we've peaked in terms of the amount of Bitcoin or individuals that are holding their own keys? Because you have examples of billions of dollars going from self-custody to the ETF. And does this pose a risk to Bitcoin, that so much self-custody is like flying to these custodial products?
Well, I think that what we've reached a maximum on is the growth rate of self-sovereign individuals, right? And so while there's still like new people like going down the rabbit hole and getting their hardware wallets and getting set up on multi-sig and running their node, I haven't seen the growth rate increasing. So, but I think that there's like a real reason for that, which is that not everybody's like a computer nerd. Not everybody is wanting to take on that responsibility. We can debate, with them ad nauseum, but they're, I don't. So then it goes back to like, okay, unless Coinbase does get hacked, then we'll see a sudden, increase in. But who I really think has kind of the strongest incentive to be able to get more people holding their own Bitcoin is the hardware wallet manufacturers, like doing advertising, right? But also making the products easier to use. And so I think that just improving kind of the learning curve, making it very seamless. There's really cool, like the Cold Card Q looks like a BlackBerry NFC. All these things are going to gradually increase the UX to a point where it's just second nature. But I also think that people used to learn how to write checks, right? So it's not like they can't learn how to do it. But maybe the right approach would be to have like curricula and schools actually teaching kids how to hold their own Bitcoin, and that's how we'll have just generations of Bitcoiners.
Yeah, that'd be something. That'd be something. The wisdom to pass along for sure. I'm curious, given how inevitable you've said Bitcoin is, does that inevitability lead to freedom money being inevitable? And in that same kind of light, I'm curious, like, what you see, if you have anything, that would be the biggest threat to Bitcoin.
Yeah, great questions. So I do think that inevitable is kind of it's tough to define, because basically the metaphor I use is a soccer team, right? So you could have like a World Cup winning soccer team of just the best playing against 5-year-olds, right? And obviously the World Cup team is going to win, right? So it's inevitable. But if they sit on the bench, the 5-year-olds are going to score, and the World Cup team's going to lose, right? So they still have to play, even though it's inevitable. And so that's kind of the metaphor I like to use with Bitcoin of like, yeah, it's inevitable, but like we got to do the work to make it happen. It's not going to do itself. And so that's kind of my view on that. Now, it is inevitably freedom money as well, in the same sense, right? Like, if we let it get co-opted and say, oh yeah, it's fine, we'll just only have the government run Bitcoin nodes or something, I don't know. Then yeah, we lose freedom money, right? And so we do have to make sure that we're doing our part to advance that. But it's also it's amazing how much free riding can happen on that. So you can almost have just like the option to hold your own Bitcoin is enough freedom that Bitcoin changes the world, and everybody's using third-party custody, right? It's all custodial, but they have the option to not, and that's what keeps the custodians honest, and Bitcoin's freedom money. And so now you could get into a debate about like, well, the custodians are going to block off your access, so you're going to lose that freedom very quickly. And so, but all it takes is like 10% of people, exercising that freedom, and especially, obviously the biggest whales exercising that freedom. because a custodian, at a past company I worked for, we had kind of this internal debate about withdrawal fees and deposit fees and all of this. Like, no, you don't want to have those fees because you want to make it as seamless to get your Bitcoin onto the platform and off the platform, so that you have if you want to maximize how much Bitcoin you custody, you have to provide the best service, right? And at the lowest cost. And so, because it's so easy to opt out of that, I think the freedom money is here to stay. You did have a question there at the end. What was that?
Biggest threat.
Biggest threat. Yeah.
Not getting on the field, maybe.
Yeah. Well, I think that people have, and here's why Bitcoin works, is because people have an interest, a self-interest in getting on the field, right? Because ultimately, Bitcoin's value proposition of increased purchasing power only comes true if we actually get more adoption, right? So there's kind of a motivating factor there to make sure everybody's in the fight. The biggest threat, I think that it'll get solved, but the quantum computing issue is real, and so again, the quantum computing experts, developers, protocol researchers, they have to get on the field. They have to solve it. It's not like an intractable, unsolvable problem. Some parts of it are really thorny, like, what to do with Satoshi's coins. But there, I come from the mining industry, so I think that they'll get mined. And that's actually, I think that's okay. That might be my most controversial Bitcoin take, is that if Satoshi does not move his Bitcoin to something that's quantum resistant, then the Bitcoin will get recycled. And I would liken it to like, if a gold ship sinks in the middle of the Atlantic in the 17th century and then it gets dug up in the 20th century, like, do we have to find the heirs, the descendants of the people who own that gold? Maybe not. Maybe not.
That's super fascinating analogy. Yeah, because it is interesting reading like both sides of people say the Bitcoin should be burned, and then it's just like, hey, this is just like gold you find on a sunken ship. But super fascinating. I want to make sure if is there anything that I didn't ask you about that you want to make sure we touch on?
No, we covered so much today. Thank you so much, Tima, for the excellent conversation.
Absolutely. No, I thoroughly enjoyed it. Would you be able to let people know where they can find you and or your work, or know more about you?
Yes. I spend way too much time on X. So at Bitcoin Pierre is where you can find me. My DMs are open. Always happy to chat Bitcoin.
Awesome. Well, I really appreciate it. Thank you so much, Pierre.
Yeah. Thank you, Tima. Have a great one.